Hello and welcome to this special interview. Joining me today is Sumit Sharma. He's had a corporate career of more than 30 years, and he is now looking at solving a very important problem of gold and how to monetize it through loans. So it's a very interesting career progression for someone who's worked at the highest levels across different companies over his career and has launched this startup a couple of years ago. It's called Radian Finserv. Sumit is the founder. And today we're going to talk about what he's seeking to do and what kind of a problem he's trying to solve. Thank you very much, Sumit. It's wonderful speaking to corporate leaders who, at having achieved a lot, are trying to now solve for problems which the community faces. So first up, my question to you is, we Indians all understand gold and we also understand personal loans, rightly or wrongly. But what is the problem that you are seeking to solve by giving gold loans? Because there are a lot of entities which do give gold loans, but from what I understood, you're focusing more on the younger people who have the propensity to take personal loans to spend their way through in this whole buy now, pay later regime that we are in.
First of all, thanks, Vivek, for having me here. Great to be speaking to you. Talking about gold in India, I think we Indians have a special affinity for gold. If you look around the world, we have by far the highest amount of gold, so to speak, sitting in our households. Various reports suggest that we have between 25,000 to 28,000 tons of gold sitting in Indian households. And if you compare this to a sovereign holding, the biggest sovereign holding is that of the US, which is around 8,000 tons. So we have more than 3 times the biggest sovereign holding sitting in our households. Now, obviously, not all of it gets monetized, not all of it comes out. And if you look at the gold loan market today, which you rightly pointed out, which has been there for some time and it's doing very well, probably has only about 1,000 to 2,000 tons, which is sitting in the various vaults. One can argue that a lot of it is not going to come out because people don't look at it, but I think there's a significant road ahead as far as the loans are concerned. Coming to your question, what we are looking to do is to see how we can expand the market. There's a lot of dormant gold sitting. We believe that gold loan is smart. In fact, one of our taglines is gold loan is smart. And it's not really the last resort, which many somehow see it to be. Interestingly and encouragingly, we are seeing certainly in the southern part of India, not only is there a lot of gold, but more importantly, there is an increasing willingness to monetize it for planned expenses, not just for an unplanned opportunity that unplanned requirement, so to speak, that comes in. We have, for instance, farmers who would take at the start of the crop season, who would take a loan against gold, and then at the end of 6 months or thereabouts, when the harvest is complete, they take it back with whatever the harvest yields to them. And similarly, a lot of planned expenses. So that's really the way we see to go, and a lot of dormant asset which is sitting in Indian households and almirahs and lockers and so on is something that can actually provide a significant impetus to the overall economy in India. So that's one. You mentioned about relatively younger folks. We are seeing, and we are relatively early in our journey because our operations are only about a year plus old. We started expanding after our NBFC license, which we received exactly a year ago now, end of September of 2022. So we have been expanding since then, and so relatively early in our life cycle, but we are seeing a lot of non-traditional borrowers, if I may use that word. So it's not just the low and mid-income groups with who don't have steady income. We are seeing a lot of people with steady jobs, people who are looking to, like I mentioned earlier, work towards a planned expense and so on. And that's something that we wish to expand on. Technology plays a role, which obviously everybody is working towards. We have taken a hybrid sort of route to this, not pure technology, not pure branch model. And I'll speak about that a little more as to how this actually starts to bring in. So I hope that starts to provide an answer to your question. Happy to speak more about that.
So do you feel that younger people, I mean the community you talked about, whether it is if you look at people say from our generation, they were the people who probably kept buying gold and keeping it in their lockers or in their cupboards. Or like you mentioned, farmers. I mean, rural India has always traditionally looked at gold as a very important way of saving up for the future. But our millennials, are the younger Gen Z, so to speak, do they also view gold? Do they have, I'm not talking about their parents holding gold, but about themselves. Are they big purchasers of gold as well?
See, yes and no. I mean, purchasing patterns of gold. I mean, there is a lot of information that's available from an investment perspective. Gold is on a sort of steady upswing if you look at a long-term trend and so on. So anybody who starts looking at structured investment typically looks at gold as an asset class. Coming to the question that you asked, do youngsters actively buy gold? I think there are different segments. And if I have to give a short answer, I'll say yes. If I have to give a longer answer, I'd say that gold as a physical ornament versus the digital gold that is now come in the ETFs and so on and so forth. People have started using different types of asset accumulation, so to speak. Our experience, which is really about a year plus in the operations, seems to suggest that younger folks are looking at gold as a good avenue, both to build asset and more importantly, from our perspective, to monetize it for specific sets of activities or expenses that are needed. In our customer segment, which is roughly about 4,500 today, we have obviously customers ranging from early 20s to late 60s and thereabouts, and everything in between. But when I speak to some of the younger folks who typically are more financially savvy, they see two or three values. And when I must have spoken to 300 plus customers one-on-one at various points in time during this 1.5 years or so. And one thing they say is that the benefit of gold loan is one, that your monthly expenses, monthly outflow, so to speak, is lower than a personal loan because you're not paying the EMI or I used to work in microfinance earlier, where typically 1 to 2 year loan cycle and you're paying the EMI and the interest. So monthly burden, if I may use that word, of payment is relatively higher. Gold loans have the option of either paying only the interest during that period of the loan tenure or not paying anything at all, just a bullet loan. So that's one. It makes it easier during the period, and there's no monthly tension, to so to speak, of coming up with a large amount, depending on whatever they're using that for. Second, because gold is more often than not a treasured asset. So it's the value for the owner is actually more than the weight of the gold or whatever you sell it, because there's some sentimental value attached to it. It could be from a wedding, it could be from a parent, it could be anything, where the owner of the ornament actually sees a greater value than somebody like us who would be storing it. So the younger generation who understands the value of a good credit score, a good credit record, and so on, probably a little more, see that that something like this will, I won't say force, but certainly encourage them to bring it back. So it's not like a heavy interest loan where they are taking it for a short period of time, and if they don't pay, they don't pay, and nothing much happens here. So that discipline is clearly there. And third is the rate of interest compared to a personal loan is lower. So more often than not, people have some gold sitting in the house, rather than taking a personal loan at 30%, 25% or thereabouts. It's a better it's a more sensible financial decision to take a gold loan. So really, those are the sorts of things I would say.
What would be the cost of the gold loan? I mean, we are fairly aware of the kind of rates that, say, a credit card outstanding has or a personal loan has. What is the cost typically of a gold loan?
See, gold loans range from about 10-11% per annum all the way to 20-21% per annum, and everything in between. And like you rightly said, or we mentioned that they compare favorably to personal loans or some essentially credit card type loans, which run into 30, 36, and even higher rates of higher percentage rates of interest. Gold loans tend to be, the cost is slightly higher in some cases because there's an operational cost with gold. You have to store it, you have to secure it, safeguard it, and so on and so forth. So really, that kind of drives the operational cost of gold loans to some extent. But broadly, that's how they compete. They're generally cheaper than other loans for the reason that they are secured through the ornament.
So do you take the gold as collateral and keep it with you, or is there a third-party mechanism? Because the point you made earlier that, people tend to get very sentimental and they feel that if I'm parting with this piece of jewelry or this, piece of gold that I have of sentimental value, will it come back to me? What if it gets lost? What if I default? How are you solving that problem?
So just before I answer that question, I'm going to take a little bit of a detour and set the context. See, when we started the organization, we used to have these conversations. Sanjeev and I, we would talk just like this on Zoom call because Sanjeev is based in Bombay. I was here. That we will have an organization which is a technology company and a logistics company. Finance is just, because we are in finance, it's incidental. And within 3 months of our starting, actually, I had changed that approach almost entirely. In what way? Basically, when I spoke to various customers, they repeatedly said that we would like to see where you are. And that was the genesis of us pivoting from a pure play digital customer acquisition plan to actually setting up a physical distribution. Today, we have 35, 36 branches across 5 states in India. And the genesis of that was these conversations where we started setting up a physical branch, which is not dissimilar to some of the incumbents who run a complete branch model. We then started to talk to customers through both digital channels as well as going, BTL as the terminology suggests, going and talking and meeting customers through various interactions. And that started to provide us, insights into customers and, interactions and so on and so forth. So we set ourselves with the physical infrastructure. We use technology and then reach out to customers. Vivek, could I just go back to the question one more time? And as I was speaking, I think I've kind of moved away from the train of thought that you had set me on. So could you just repeat the question?
So my point was that people tend to want to see the gold, or they want to, if they're giving it as collateral, I mean, they don't want to part with it to another party in the belief that I might not get it back. Is that a problem, and how do you solve that?
Yeah. So you had asked me where do you store it and so on. So we have all our branches have vaults which are controlled through various mechanisms, protocols, and the use of technology, which are fairly safe. So that I think is one level of comfort that customers get. We also work with various banks where we take the gold and deposit it in the bank's vault. And customers know that it's sitting in XYZ branch of this bank. And obviously, banks provide that level of psychological comfort from a safety perspective. We have started talking to some third-party vault providers, vaulting solutions as they are called, where we have set an internal limit that within a branch we will keep gold up to a certain level, and once we have more gold than the prescribed limit, we will start moving it to a professional vaulting provider. So that again adds a level of comfort from the customer's perspective. But to answer your question, we have our vaults, and as well as using the bank vaults.
Yeah.
Over time, we have a thought and plan, and it's a little early in the game for us right now, so we don't really talk much about it. But since we are on this topic, we intend to provide selected customers a service where they can keep the gold with themselves, provided we are comfortable with their creditworthiness and their behavior and so on and so forth. So we will run an internal algorithm and we will leave the gold with them. Very similar to how you would leave the vehicle with a customer when you give a vehicle loan or a housing loan and those kinds of things. Obviously, there is potential gaming of the system, and we have to work towards that. So that's something that we are in the process of working. But over time, that will be an additional benefit to customers where they can actually keep the gold with them. We have seen cases where customers would come to us and take the gold for a period of 5-10 days because they need a necklace or a bangle for whatever function or ceremony, and then they come and deposit it back to us. So from a customer's perspective, it will be a fairly significant value add as and when we are able to deliver that. So that's what we are working towards.
What, according to you, Sumit, is the edge that you have versus others who are trying to do the same thing? So, for example, if I look at banks, they have been more focused on, while they've been holding gold in their vaults by giving a safe deposit, to customers for many, many years. But when it comes to lending, they are more focused on, say, a home loan or a personal loan or issuing a credit card or vehicle loan. One looks at NBFCs, again, many do offer gold loans as well. But the point is, what is your edge that you feel that you have versus others?
I think it's a very important question. And so it's going to be a slightly longish answer, so bear with me on this.
Sure.
Let me start by saying that at the outset, gold loan is a commoditized business. You take the gold and you give the money. So that's the essence of the offering. You can put bells and whistles around it. You can say that I'll do it in the branch, or I can do it at your doorstep. You can build fairly glamorous apps. You can bring in technology which safeguards the gold for transit. It can't be opened and so on. So, but the basic commodity, basic offering remains relatively unchanged. Not relatively, it remains unchanged. Similarly, the gold loans can be made more attractive in terms of the customer's perspective by giving a higher value for the gold, or creating different products, or making it easier to pay through payment gateways and so on and so forth. But again, I default back to the statement that basic offering remains the same, that you take the gold, hold it for a period of time, give the money to the customer, and at the end of the loan tenure, the whole cycle plays out in reverse. Now, within that context, the industry has been there for some time, for a long time. The regulator, the RBI, has brought in certain caveats and made it a more structured industry, probably in the last couple of decades. We have the incumbents who've done very well, some decades old, some are relatively new. If you look at their performance, continues to grow, especially during and after the pandemic. The requirement for gold loans has increased. So now, coming to the point that you made, I would say that there are four broad types of lenders in the market. First, the banks. Obviously, they have the wherewithal in terms of the resources, and they have the comfort and the trust of the customer. because because they are banks. However, like you rightly pointed out, gold loan tends to be more often than not a tertiary product, not even a secondary product, because they've got multiple levels of offerings, and this is, you can say that it's never really a specialized offering. So it tends to be something that they also do, and that gets reflected in the way the gold loan is actually pushed. I've worked for banks, and I've seen this from inside as well as outside. That it's an interesting, it's a lucrative product, but never really gets the frontline attention, and that's why you see many banks are now getting onto the act, but somehow it's never really the frontline product for various reasons. And I don't want to speak on behalf of banks. And banks also have, all being equal, banks tend to take a little longer time in doing the gold. They may not give the maximum value and so on and so forth. And that's why you possibly see customers walking through banks which display that gold loan available at 10% and walking 200 meters to another company and taking the same loan at 18%, 20%, and they feel comfortable because of that. So that was number one. I said 4 types. Second is the traditional incumbents who are doing very well. So they are specialized lenders, so to speak. They may do other things as well, but they have over time developed a niche and a skill which serves the customers very well, and it obviously gets iterated over many years, where they respond to customer needs, and obviously customers flock there. We've seen this in the results. In spite of slightly higher rates of interest, they turn around in 30, 40 minutes. They move very fast. They take care of customers, typically the branch-led model, which we have seen with incumbents, and results speak for themselves. A third category, which has emerged relatively recently, is that of fintechs. Fintechs typically are technology-led. They more often than not work as branchless digital models. And like I said, we also had started with that approach, although we pivoted very fast into something like a hybrid model. I'll talk about that in a little more detail. And then there's a fourth category of local money lender or the jeweler, which by far is the largest in terms of the market size, or that typically various reports seem to suggest that they're more than double the structured industry, because people have comfort with the local money lender or the local jeweler. They charge high rates of interest. They are not necessarily regulated, they are not regulated, and but they have the comfort. They have a tijori or a box where everything gets stored, and they work within the local area, local community. So those are the broad types, if I may generalize. Obviously, I'm oversimplifying to make a point. Where we sit is probably between categories 2 and 3 that I mentioned, which is the traditional incumbent branch-based lending versus totally branchless and technology-led. So we started, like I said, in our thought process with the third category, but we pivoted and we've set up the physical infrastructure. So we think that provides customers more comfort. We've seen this. I've heard this. I've actually experienced it with customers. And we use the technology. We offer doorstep service like the others. So that's what we are growing as. You asked me, how are we different? So that was point number 1. The other thing we feel that where we are different is, though we are a startup, we have come with a fair bit of experience and expertise, so if I may use that word, of scaling organizations. I used to run a microfinance company. I started it from scratch. It's doing very well now. Sanjeev has been the CEO of multiple organizations in his illustrious career. And the team that we have, the COO, Partha, the Chief Business Officer, Sangan, or Murthy, who's come in recently to head our agri business, all have fairly significant knowledge, experience of setting up and scaling. So we believe relatively modestly that we have the expertise and the ability to actually build this and scale it up. Ultimately, we believe that any organization succeeds or not succeeds on the way it is executed. I think there is technology support, there is new ideas and everything else. But if you don't execute it well, chances are you may not succeed. And that's where we believe that from an organization's perspective, we have that. And third, Vivek, is when we started, while we had plans and we still work with banks as a business correspondent, we were very clear that we want to develop a core offering, which is lending. So we waited for the NBFC license before we started. A license came last year, and last year we started the expansion beyond Bangalore. So we want to grow and work in the core offering, rather than try and create a niche, and become an aggregator for lenders and so on and so forth. So we will do that as well, but I think the core offering stays. So apologies for the long answer. But
No, that's perfectly fine. It was good to understand. One final question, Sumit. Uh, what is the amount of loan that you provide? Is there a limit? Is there a cap? Or is it purely a function of how much gold is one putting on the table?
see, our average ticket size is around 1.6 to 1.7 lakhs. Um, and we have done gold loans as low as about 20,000, 15,000, and as high as 30, 40 lakhs. I mentioned to you the average. Occasionally, we get a higher ticket. I know of loans which run upwards of a crores as well, in some organizations. We don't have a minimum or a maximum specified, so to speak. Ultimately, we want to address the customer's needs. We see certain geographic differences. So, for instance, in Tamil Nadu, we see that the average ticket size is smaller, versus Andhra, where the average ticket size is slightly higher. And we can delve deeper into explaining as to why that's happening and so on and so forth. But it's a function of the purpose that the loan is being taken for, or how the teams are driving it, and so on and so forth. My personal preference, given that given that I come from a microfinance background, is to build smaller tickets as much as possible, and also bring the gold loan to the cusp of microfinance and gold lending, to build financial inclusion. One of the things that we are working towards, Vivek, is to use gold as a tool and a means for financial inclusion in tier 2, tier 3 cities and villages of India. That's where the agri push comes in. That's where we want to experiment with a loan of a small amount of gold. Most organizations don't take very small quantities of gold, and build a larger loan, which, like I said, would be at the cusp of micro lending and this one. So that's something that's in the works that we would want to build on.
It's been a pleasure talking to you, Sumit, and great to hear that you are seeking to bring in financial inclusion through unlocking this asset class, which is lying in vaults, and everyone's been trying to come up with some way of, how do you unlock something like this and make it more financially useful to people. And I wish you all the best in your journey, and look forward to many more such conversations. Thank you.
Thank you, Vivek. Thanks for having me.